Most people are earning less than 1% on their savings and don't even realize they're losing money to inflation every day. But there's a better way. Fidelity's cash management account quietly pays up to 10x more than a regular bank and still gives you FDIC protection up to $5 million. Here's what you're about to learn and why it could change how you manage cash forever. How much your bank is actually stealing from you in lost yield. Why Fidelity's account isn't technically a bank account and why that's a good thing. The exact yield numbers, 4.96% versus 0.45%, and what that means for your money. How to get up to $5 million in FDIC insurance, legally and automatically. What to watch out for before switching, and how I personally use this to earn more while keeping full liquidity. If this kind of breakdown helps you make smarter money decisions, a quick like or comment goes a long way and helps me know to keep making videos like this. Let's start with some hard truths about traditional banking. The average savings account in America pays just 0.45% APY, according to the latest Federal Reserve data. Meanwhile, inflation continues to erode purchasing power, meaning your cash is actually losing value sitting in traditional bank accounts. But here's what really caught my attention. The Fidelity Cash Management Account is currently offering a 7-day yield of 3.93% through their SPAXX money market fund as of May 2025. That's more than 8 times what traditional banks are paying. Even their FDIC-insured sweep option is paying 2.21% APY, still nearly 5 times the national average. The math is staggering. On a $50,000 emergency fund, the difference between a traditional savings account and the Fidelity option represents over $1,500 annually in additional income. That's real money being left on the table every single day funds sit in traditional accounts. Now, let's break down exactly what the Fidelity Cash Management Account actually is, because this understanding is crucial. This isn't technically a bank account. It's a brokerage account designed specifically for cash management. This distinction is important because it explains how Fidelity can offer superior rates and features. The account operates on a core position system. When you deposit money, Fidelity automatically sweeps it into one of 2 options you can choose from. The first is the Fidelity Government Money Market Fund, SPAXX, which invests in U.S. government securities and repurchase agreements. The second is their FDIC-insured deposit sweep program, which distributes your cash across multiple partner banks. Here's where it gets interesting. As a brokerage account, your funds benefit from SIPC protection up to $500,000 for securities and $250,000 for cash. But through the FDIC sweep program, you can actually achieve up to $5 million in FDIC insurance coverage by spreading funds across 23 program banks, including Wells Fargo, Citibank, Goldman Sachs, and JP Morgan Chase. Even with rates changing, Fidelity's yield has stayed nearly 10x higher than the average bank. That means your money doesn't just sit. It works harder every day. The 30-day yield provides additional insight into performance stability. SPAXX's 30-day yield of 3.95% closely tracks the 7-day yield, indicating consistent performance without dramatic fluctuations that might concern conservative investors. For context, this fund maintains a weighted average maturity of just 23 days and holds 55% daily liquid assets and 70% weekly liquid assets as of May 2025. This liquidity profile ensures your money remains accessible while generating superior returns. The FDIC sweep option at 2.21% APY offers a different value proposition. While the yield is lower than money market funds, it provides explicit government guarantees that some investors prefer for emergency funds or large cash positions. What makes the Fidelity Cash Management Account particularly compelling is its complete feature set that rivals traditional banking. You get direct deposit capabilities with routing number 101205681, a debit card with contactless payment technology, free check writing, and unlimited global ATM fee reimbursements. The mobile banking experience deserves special mention. The Fidelity mobile app provides real-time spending alerts, mobile check deposit, integration with Apple Pay and Google Pay, and seamless connectivity with services like Venmo and PayPal. This digital-first approach eliminates many traditional banking friction points. Bill pay services are completely free, and you can set up recurring investments directly from the account. This integration between spending and investing creates powerful opportunities for dollar-cost averaging strategies that traditional banks simply cannot match. The insurance coverage structure represents one of the most sophisticated approaches in retail finance. Through the FDIC sweep program, Fidelity distributes cash in $245,000 increments across program banks, slightly below the $250,000 FDIC limit, to ensure principal plus accrued interest remains fully insured. This systematic distribution can theoretically provide up to $5 million in FDIC coverage, though actual coverage depends on bank availability and your existing relationships with program banks. It's crucial to understand that if you already maintain accounts at any of the 23 program banks, those balances count toward your $250,000 limit at each institution. The security framework includes two-factor authentication, 128-bit encryption, real-time fraud monitoring, and Fidelity's customer protection guarantee. The debit card features chip technology and can be locked/unlocked through the mobile app for enhanced security. Here's where sophisticated investors can really optimize their returns. The SPAXX fund offers significant tax advantages because 55.09% of its 2024 income was state tax exempt due to investments in U.S. government securities. For investors in high-tax states like California or New York, this tax efficiency can substantially improve after-tax yields. Compare this to the FDIC sweep option, where interest is fully taxable at both federal and state levels. The Fidelity Treasury-only money market fund, FDLXX, offers even greater state tax exemption at approximately 97%, though with a slightly lower gross yield of 3.91%. The tax implications become particularly important when switching between money market funds. Within taxable accounts, these switches are considered taxable events that can trigger capital gains or losses. This makes the initial core position selection crucial for tax-efficient cash management. Despite its advantages, the Fidelity Cash Management Account has specific limitations that potential users must understand. Most significantly, you cannot deposit physical cash. This account operates entirely in the digital realm. For individuals who regularly handle cash, maintaining a no-fee checking account at a traditional bank may be necessary. The account doesn't support sub-accounts within a single CMA, though you can open multiple cash management accounts for different purposes like emergency funds versus discretionary spending. Recurring HSA transfers are supported, but subject to IRS contribution limits. Settlement timing presents another consideration. While electronic fund transfers typically clear within 1 to 3 business days, there's often a security hold period before funds can be withdrawn, even though they may be available for investing immediately. Found this analysis helpful? Supporting the channel with a like or subscription keeps this research coming your way, and it helps me continue providing these deep dives into strategies that can genuinely impact your financial returns. After analyzing the data and features, I'm implementing a hybrid approach that maximizes the benefits while minimizing limitations. I'm moving my emergency fund and primary checking account functions to the Fidelity Cash Management Account with SPAXX as my core position. The state tax exemption and superior yields make this optimal for my tax situation. I'm maintaining a small no-fee checking account at a local bank exclusively for cash deposits and any services the CMA cannot provide. This represents less than 5% of my total cash allocation, with the vast majority earning competitive yields at Fidelity. For retirement account integration, the CMA serves as an excellent destination for required minimum distributions. This creates a seamless flow from tax-advantaged accounts to taxable cash management, all within the Fidelity ecosystem. The ability to link brokerage accounts, retirement accounts, and cash management in one platform provides unparalleled convenience for portfolio rebalancing and tax loss harvesting strategies. While money market funds like SPAXX aim to maintain a stable 1.0 NAV, they're investment products that carry market risk. Unlike FDIC-insured deposits, there's no government guarantee that you won't lose principal, though historical performance suggests this risk is minimal for government money market funds. Interest rate sensitivity affects all cash management options. As Federal Reserve policy changes, both money market fund yields and FDIC sweep rates will fluctuate. The current rate environment favors cash management accounts, but this advantage could diminish if rates decline significantly. Regulatory changes could impact the brokerage account structure or FDIC sweep mechanics. However, Fidelity's scale and regulatory expertise suggest they're well-positioned to adapt to changing requirements. Thanks for watching to the end. Until next time.